Hi all, namaskaram, good morning, good afternoon, good evening, or good night whenever you are listening. Important thing I would like to say is markets are meant only for the disciplined guys, not for the people who are emotional. Guru mantra is be rational, not emotional in stock markets. So let's start with today's topic is mastering the bearish engulfing candlestick pattern. If you see here, this bearish candle has almost eaten the entire thing or engulfed the entire thing. All the profits or all the move what the green candle has made and the red candle has engulfed it. So we'll go further into this. Before getting into this, consult your financial planner. All the discussions are made purely for the educational purpose, not for recommendations. Do your own due diligence. Understand the risks in investing before getting into the how the bearish engulfing candlestick pattern forms. I would like to say what is in a candlestick. The candlestick is basically in a real body which has this one, and let's talk about bullish. This is a bullish and this is a bearish. The bullish thing is basically the opens here and closes on the top. The bearish or the red or the black candle makes the open at the top and goes below the low. Close is below the open. So these are important things. So let's go this way. Bearish engulfing pattern is this one. The definition is simple. It has to have two candles. I will read out so it will be very easy. The bearish engulfing candlestick pattern is a two candle reversal pattern that signals a potential trend change from bullish to bearish. It consists of a small bullish candle followed by a large bearish candle that completely engulfs the previous candle. So this is important. So if you know this one pattern, if you whenever you see engulfing or a word, if it's something new you are listening, then also you can understand this one. So bearish, there is a bullish engulfing also. We'll talk about that in a bullish thing. So here let's talk about the bearish engulfing pattern, the close one, how it is happening, the open, the green candle we discussed. Open happens here, close happens. The bearish candle opens on the top day 2 and closes on the day 2. This is a bearish candle. I think these are the other signals engulfing things, so we'll go deeper into this. So the first candle is always, now the bullish will not go the bearish. The first candle is always short, the second candle is long, second candle engulfs the first candle, and this is a bearish. You can see here how fat the trend happens. The failure, this is a confirmation thing. The confirmation can happen here itself, and then you can enter that this is a failure thing. So don't, so you have to, before you entering the trade, make sure the confirmation happens. So this is a 2-day reversal pattern with medium reliability. Characteristics are simple. It's a 2-day thing. Traders look for bearish candles to open the moves from a bearish side, or take the trades bearish side. So this is one kind of thing. You can clearly say how the reversal do happen. I will tell you an example here. If you see here, this is a pure bearish engulfing kind of thing. Dr. Reddy's Top Stock Research. Top Stock Research is one of the good, I think the best from a pricing point of view, as far as I have seen. The best. I use this a lot. I also recommend to my students and my partners, whoever likes to come into the stock market. So use the Top Stock. The affiliate link is provided. Well, they don't pay anything to me, but the affiliate links are there below. You can use it. So if you are getting some advantage, to help the team, our team, so they will also get motivated. So what I would like to say, if you see here the engulfing, what has happened, 1 2 3 4 5 percentage wise also, if you see here, 1382, it came up to 1300. That's in a good almost like 6 7 8% moves. That's a very good moves. And then almost like all are red candles, and this is the first candle which you see at the day range also. Fine. Before you take this, before you, if I have to say, before you take the positions, make sure the stock is an uptrend. Technically the stock is always at the uptrend, and this is almost at the double top. If I have to say, if you consider this is a different story, but it is almost like trend line is also hitting. So this is good. So if you want to know more, you can connect with me on WhatsApp groups, Telegram links, and the social media handles are given in the below. You can connect there, and there are educational courses, and you can also connect with me for consulting, for portfolio reviews. If you want this presentation, you can connect with me at the below, or if you want to know, every month-on-month subscription, month-on-month Zoom sessions, you can connect with me on subscription. There is another link. There are books, there are subscriptions, there are consulting presentations, portfolio reviews, and the courses you can connect with me. So let's go on to the next thing. Here also the top stock thing, if you see the engulfing thing, how it has helped here. So the engulfing has happened here, and then almost 778 to 720. This is for the Sun TV, again top stock research. The engulfing is kind of happened here also, but from here you have seen 3-4 candles and it has taken the stop loss out here. We'll talk about the stop losses further in other things, more stop losses courses. Accuracy, you can see in majority of the cases, the next candle after the engulfing pattern is always low, and the lows here. It is very nice. Some studies says in some stocks that 80% 3 candles, third candle you have to take the position. So you have to make sure the stock has to be an uptrend. Don't do it in a bearish thing. If you have seen here, it is almost like in a double top kind of scenario. So double top kind of scenarios, boom, you should take that position. That's all. And if it happens engulfing, what else you want? You're making money. And you have seen here the open, the body close. You understood. I hope you understand. If you don't understand, no problem. There are courses below, there are books below. You can buy those books, you can buy those courses where we will go more deeper, more detailed, more examples will be given in those things. So psychological implication, important thing is don't get confused, because again Guru Mantra, I think I started or not, Guru Mantra is be rational, not emotional in stock markets. So if you're just because of owning something, you don't, it's like don't get married to your stocks. Don't think it's, treat it like it's a capital thing, and if you have already made good money and if you see this pattern, it is good that you exit. If you're a trader, investor, it's a different ball game altogether. We're not talking about investing here, we are talking about trading kind of mindset. Even for investing, I think if you made good fat returns, fat pigs are slaughtered first. I think Jocks also book says that in one place. So anyway, bearish sentiment shifting, you should look at it and shift in market dynamics. Anytime this can also fall, so don't stand here, you come out from there. So market condition, conducive bullish momentum, and the overbought conditions are high trading volume. So if these three are there, so overbought, you can see it in RSI trading volume. You can see here, you can clearly see here there is a good volume has happened. If you can see it here, it's almost the highest of all the candles. So something is cooking, you can really identify here. So I think, let me come back here. I think it really says the volume and the overbought conditions. RSI I didn't keep, but I'll keep further. But it's very nice. These are like juicy trades. Techniques for confirming thing, price action confluence. I think the third candle will tell you. Volume analysis I showed you. Trend alignment, the lines I will show you. And if you see here, I will tell you an example. If you clearly see here, if you draw a line here, I will show you this. If you draw a line here, boom, and then it has fallen so much. Can you believe it? Can you believe it? How is it happen? Fantastic. Sometimes I really feel like these are very nice trades where you can catch it up. And then I think let's discuss about the earlier ones. It all depends upon trend alignment, candlestick and order. So important thing is short term, medium term, long term. Have your views. Short term is, I would definitely say it's less than couple of hours or 4 hours. Medium term is kind of in a day or a couple of days. Long term is weekly or a monthly charts. Look at that pattern. I think we discussed about this more detail earlier also. I think what is this missing? Yeah, integrating the bearish engulfing into trading strategy, confirm the additional indicators, set up appropriate stop losses, identify appropriate conditions, and manage risk and setting appropriate stop losses. Risk is very important. Stop loss placement, position sizing, this is very, very important. If your position sizing really makes you king, hero or zero. So you make sure that if you want to really become a hero, or it's like a test match in cricket, you have to play as long as possible. So capital markets, if you want to be long, you have to make sure you are there. And short-term versus long-term trades, swing trades, long-term trades, understand those things clearly. Back testing with validating the bearish engulfing pattern. Important thing is you have to backtest them. Rigorous backtesting practice is very important. Practice is progress. Statistical analysis is very, very important. The risk reward ratios, efficiencies, backtesting, these all things drives your capital growth. Do keep that in your mind. If your capital has to be grown, you have to keep doing the practice. Keep it in a journal, electronic or physical or non-physical, wherever. Make sure you go through that journal. Even I do it now after 20 years of trading and after paying $100,000 as a fees to multiple gurus and whatnot, so many coaches. Some coaches I paid a lot much and I just learned the trend line intersection. I'll be surprised. Anyway, testing across the assets. I would definitely say these are very, very important. Common mistakes, I would say, like, if you do not want to fall under the common mistakes things, there are courses below. I can help you with consulting and portfolio reviews. I have a couple of books. There are multiple books. If you want more interactions with me, you can also connect through subscription, WhatsApp, Telegram, and social media links. So apart from that, what I can say is master the pattern, integrate that into your strategy, and boom, it's like Arjuna has multiple astras. This is one of the good thing you have seen. 80% probability is happening. Thank you for your time, and you can connect me here and other handles I have given in my links below. Thank you and have a good time. Bye all.